Hey guys, we drop another podcast right now with Paul and Seth. We are talking, guys, the biggest topic we ever have is Tesla, Paul's hatred for Tesla. So I argue Paul for about Tesla stock. I argue with Paul for over 20 minutes about why it's awesome to own, and he keeps telling me why it's the dumbest stock to own, right, Paul?
Pretty much.
So Paul is going to flip out the financials and show you why he doesn't believe in this stock
I'm going to whip it out
at the moment. But Tesla could be a good buy one day, but not now. So follow us right now on Learn From Us podcast. Let's go. Thanks for joining us on Learn From Us podcast. Paul, Tesla has always been a hot topic. I guess I used to be a Tesla fanboy. I have one parked in my garage. You have never been. And every time I sort of bring up what you're teaching me about the Tesla, its value and what it should be valued, I get blowback from Tesla fanboys, like I said, which are most of my friends, saying this company is growing, this company is spending money to build more things. So every time you give me, I'd like to hear your thoughts on why Tesla keeps rising. What? Tell me.
Why do I get like fire in my stomach when you said people say the company is growing? I think that's my biggest pet peeve about everybody when it comes to investing.
Let me show you an example. When the Model 3 came out, the Tesla Model 3, there was complete chaos. They could hardly build the cars. They had hundreds of thousands of them ordered. They had to build them in a parking lot. And Elon Musk said himself, the company almost went under. They were 2 weeks from going under. Ready? Now they have the Model Y ordered. It just came out. There is absolutely zero news reports about trouble producing it. My brother-in-law alone said they sell every car they make. So why can't just general hype and fandom, which may be elevating a stock price, why can't that really be its value if it is showing that it is? You know, so I bring it to this. Oh, he's sharing a screen. So I bring it to this, Paul. While you pull that up, I want to bring you this. You know, like there are plenty of expensive cars in this world that are quote unquote overvalued. They, you know, the car that you drive, or my neighbor has 4 Lamborghinis in his driveway. They cost $400,000. He could drive a car that's $20,000, but he's paying 80 times that for a Lamborghini. So is he overvalued, or is he buying a car that's exactly valued the way it is? And my question is, show me your thoughts about Tesla and why everyone's wrong but you.
First off, your neighbor who has the Lamborghini is making a personal purchase. He's paying for something he thinks is high quality. Yep. You are right that there may be potential in Tesla long term, but here's what I'm going to look at. Here's Tesla's financials. Can you see this okay? Should I increase the size of this?
No, it's great. Yeah, you can go ahead a little bit. There you go. Perfect. Ooh,
okay, so last year, Tesla did $25 billion in revenue. It lost $860 million. So they've never made money in a year.
So the argument,
look at this.
Let me stop you right there. The argument is they're a young company that's growing.
Perfect. Love it. Great argument.
They've sold about 1 million cars total.
Great. Their market cap, $152 billion. $152 billion. Let's pull up our friend Toyota. Let's look at something else first. Okay, but before you do that, someone might say that there is no fandom behind Toyota. Great. Sounds great. Good for them.
Toyota makes a zillion cars. Toyota's okay with making a kind of a crappy low-end car that's going to sit on a lot for a long time.
Great.
And there's no...
Last year, Toyota sold 10.6 million vehicles. 10.6. And Toyota is currently worth the same amount as Tesla.
Pretty much.
Essentially.
152 to 175.
Okay. 10.6 million vehicles versus
182,000 it said there.
No, 365,000.
Okay, 365,000 cars.
367. So 30 times more vehicles, and they're worth the same amount of money.
30.
Okay, let's look at their margin. Gross profit, 19% on Toyota. So that means every car that Toyota makes, they make about 19% on, with 10% to the bottom line. Let's find out what Tesla is. The exact same profit per car, 1.4. Okay, so my whole point is, you're right. Fandom, it's awesome. It's the best. So you're telling me right now, if you had $170 billion burning a hole in your pocket, you would rather buy a car company that sells 365,000 cars a year at the same margin as another car company that sells 10.6 million cars a year with way more bottom line profit. If that is your logic, I will gladly just ask you to do me one thing. Tell me every stock you ever want to buy because I want to be on the other side of it. It's absolute insanity. Tesla has a lot of potential, but this price to pay for Tesla is already factoring in all that potential. So what happens if sales triple this year? People will be like, see, look, it should be triple the price. Well, no, you already factored it in the price that it was going to be the size of Toyota. So unless it sells 30 million cars in a year, it shouldn't be 3 times larger than, it shouldn't grow 3 times more. It still has to grow 30 times more per year to even equate the size of Toyota with the exact same gross margin per car. If that really is your logic, you don't understand money, you don't understand investing, you don't understand anything, you are fucking stupid. And you deserve to lose all your money. Scene.
I know you say that all the time.
And I say that with vitriol in my stomach. I'm actually upset with people who use the argument of growth. Growth is important. I have paid for growth. But what's the growth worth? You got to do the calculation. Put it in an Excel sheet. Calculate how much they have to grow to justify. If you do this, it's a negative number. If you sit there and assume you're buying this price today and you assume all the growth you want, 100% a year, it's still going to be a negative number over the next 10 years. And they're not going to grow 100% a year for the next 10 years. Stop with that. Even last year, I don't think they grew 100%. No, last year, they only grew 20%. Not even. Come on.
All right, hold on. You're throwing around numbers and you're confusing me now.
I'm sorry.
So, are you saying it's if I wanted to invest my money and I had to choose a company like Toyota or Ford versus Tesla, you're saying this is a no-brainer? But again, I go back to, I think the fanboys would say that there's no excitement.
Great fanboys. Every company in the world, the history of the world, had fanboys. And eventually what happens? I remember in the late 90s, there was the Dell fan club. All these people would meet in Texas every year and say, we made tons of money off Dell. Where are they now?
I don't know. I don't know.
Yeah, they're not celebrating anymore. Microsoft had the fanboys in 2000. Microsoft's only a few times larger than it was in 2000 stock price. And that's with it being massively overpriced. Apple has the fanboys. Apple, at least, is a company where the financials make sense, at least. The argument I have is, can they really support being the biggest company in the world and having the most phone sales? I just have a hard time believing they can occupy that market. It's too whimsical of a market.
So for somebody,
great fanboys.
So for somebody, I mean, somebody maybe wanting to.
How much were they Roy's fanboys when a year later Elon Musk literally said we were 2 weeks away from bankruptcy? Your boys were fanboys then, and they were 2 weeks away from bankruptcy. Guess what? Being a fan don't pay the bills. He was 2 weeks away from bankruptcy. He even said that, and your fanboys didn't know that. I looked at the numbers saying, how are they making this work? I didn't say they were going to declare bankruptcy soon, but he said they were 2 weeks away from bankruptcy. Where were your fanboys then?
Talk about the news you said with Elon and stock purchases.
So like I said, I heard there was an amendment to their 10K, which is their annual report, saying that Elon had borrowed 50% of the money against his current stock to go buy more Tesla stock. And the association being made is he had a number to hit on the stock value before he got a big bonus. So there's an insinuation that he did it to drive the price of the stock up so he could hit his bonus. And by the way, his board of directors is the highest paid board of directors by multiple times over any other company in the market. And no insurance company would insure their the board of directors. Elon Musk personally insured them. So this is a board of directors that's supposed to hold him accountable, and he's personally insuring them. Is that a conflict of interest? A gigantic conflict of interest. That's what I'm sitting there saying. Like, something's not. I mean, hey, I've been wrong though. But look at this company. Year to date, from a high of 917, not the closing high, to a low of 360 in a matter of 1 month, and back up to 826. Real solid stock there, guys. This is silly. This is so silly.
I guess. I mean, again, the other arguments I'm hearing is that, well, they have SpaceX, they have solar panels.
Great. 2 more businesses that lose money like crazy. I mean, what the fuck are we talking about here?
Well, again, they're building, Paul. So
I get that. So let them build. Let them prove. As Jack Nicklaus said about Tiger Woods, when Tiger Woods had 14 majors 10 years ago, and everybody's like, he's going to beat you, he's going to beat you. You know what he said? Let's let him beat me then, and then we'll revere him. Let him get to 19 majors, and then we'll revere him. Let them earn the right to be the most valuable car company in the world first, and then make them that value. Don't pay them up front for it. That's like me saying today, hey guys, I'm going to be a billionaire. Look at the numbers. I'm going to be a billionaire someday. Give me $1 billion today. Well, no, you haven't earned it yet. But the same logic can be applied to Tesla. But wait a second. I will be a billionaire someday. I can show you the math where it's a virtual guarantee I will be a billionaire. So give me the $1 billion now. Would a bank do that for me? Would your fanboys ever do that for me? No, of course they wouldn't. I'm not Tesla. I'm not Elon Musk. Thank you.
So you worry.
What do you think of my new shoes?
I can't see him there.
I just pulled a hamstring. Oh, crap. That wasn't good. I just started working out again yesterday, Seth, and my legs hurt like crazy.
Well, you know I'm doing my burpees and my push-ups.
Are you still doing that?
250 of each yesterday. In the last 3.5 weeks, I've done an excess of 2,900 burpees and push-ups.
How you feeling?
I feel good. I'm looking better. You can close your screen now. I feel good. I'm looking better. I kind of get disgusted with the side view of our studio podcast with my gut hanging over my belly. And, I saw pictures of other people quarantined, like they're saying, oh, they were working out. I'm like, yeah, I'm not doing that. But I don't know what happened. One day I just said, you know what? I don't mind burpees, so I'm going to go for it. And sure enough, like at night, I'll put on some music right before I go to bed. And I'm like, last night at like 9 o'clock, I'm like, damn, I have to do 180 burpees and push-ups because I had things happen throughout my day, and sure enough, just got them done by 10 and went upstairs and went to bed. So, yeah, it's pretty good. So,
I'm happy.
Yeah.
For you.
Well,
you're gonna end up doing 10,000 burpees. So I'm just gonna assume you did them now anyhow because that's the way we do stocks. Oh, so that's gonna get the 10,000 burpees. Let's just assume it right now. Let's give him the trophy now.
Yeah, okay, so maybe that's my next question. So for someone maybe looking to invest some money, that's why I asked.
You're not investing money if you buy Tesla. You're not investing money. You're pissing away money. The whole point about investing is like poker, Seth.
Tell me.
Seth, if you had 4 of a kind on every single hand, will you win every hand?
Pretty much, yeah. I mean, it'd be
but what percentage will you not win? I should say this. If you have 3 of a kind on every single hand, will you win every hand?
No, not at all. You'll win maybe 40% of them.
That's your goal. Your goal in investing is the same way. You have to look at every single thing and say, if I had 100 of these stocks to buy, how many are going to win? You buy 100 Teslas, you're going to end up very broke. It's just history. You just look at all of history. Oh, it's different this time. No, it's not. Every good investor of all time says the most dangerous thing to say is it's different here. It's different with Tesla. No, it's not. No, it's not. Yeah, have I been wrong? Absolutely. Absolutely. And I know many, many people who think they're smart who love Tesla. Great. More power to you. You don't understand investing. You don't understand business. I love when I hear business people who love Tesla. You would never, ever buy a private company. Take off 2 zeros. You would never, ever buy at those numbers. The biggest Tesla fan I know, I let him look at the numbers for the Castillo del Mar for buying in. And he goes, well, let me look at the numbers. I'm like, oh, so now the numbers matter to you? Now the numbers matter to you, you fucking idiot?
Well, I mean, maybe that's just it. I think, people can obviously are blinded by maybe real numbers when it just comes to fandom, like
they don't know the numbers, by the way. They don't know the numbers. I guarantee your fandom people don't realize that Tesla is valued at Toyota's price. I guarantee they don't know that. They don't know that. They don't have a clue. All they see is $800 a share. And it was $150 5 years ago. That's all they know. That's all they know. They don't know what that $800 a share means. But just like when I met with a banker recently, no, not recently, 3 years ago, and I was buying a property in Rocky River, and I had property in Maple Heights, and he goes, oh, the Rocky River one you'll do very well on. I go, but you don't even know what I paid for it. He's like, yeah, but it's Rocky River. I'm like, you're an idiot. And guess what? I make more money. I made more money off the Maple Heights one than the Rocky River one. But because of morons like him, because everybody thinks as stupid as he does. But he's a banker. He's smart. I get so upset about these things, Seth. Why do I get upset?
You do. I mean,
I know. It's bad.
Funny part is it's a lonely road you take on these stock, on companies like this. I mean, I guess to me it sounds right because I was the opposite. I was the Bitcoin. Jesus, how many shares of Tesla did I have? I don't even remember. It was 187 shares of Tesla, Paul. I mean, when it was
Bitcoin
cheap.
at right now.
But Bitcoin's at like maybe 7.5 or something.
No, 88.
Dude, it was 7.5 like 2 days ago.
Volatility, you know how it is.
Yeah.
That's safe. Listen, and I'm not trying to tell everybody don't have your Teslas. But when you have that much of your money in the most expensive stocks, you're going to have a problem. Put 10% of your money into 3 or 4 really crazy stocks that you just want to sit there and ride the momentum on. Fine. But you shouldn't be doing this for I remember back in 2000, I knew a doctor who had $5 million in the most expensive stocks. He said when all was said and done, he had less than $40,000 in those because they all fell 99%. And he was like laughing about it. He's like, yeah, well, it was 5 million. Now it's 40,000. He goes, yeah, it happens. I was like,
yeah, I mean, I had this recent discussion with a Tesla fan, and pretty much everything I told them they didn't want to hear. They were just saying, no,
of course not.
It's growing. It's building new. It's losing money because it's building new manufacturing plants that can make cars in the future, and it's just going to grow.
Can I respond to that one?
Go ahead.
I know, it's crazy. By the way, Lisa, Seth can hear you the entire time on this podcast.
Don't blame Seth. Paul can hear you too.
I can't hear him.
Oh, that's okay.
So let's go to the financial statements.
All right, share your screen again.
Well, hang on a second. Let me make sure I pull this up properly. Okay, so ready? I'm going to share the screen.
Go ahead.
This is going to be a little complicated, I think. I'm a big fan of free cash flow. Free cash flow is your operating cash flow, how much your business makes, less capital expenditures.
Okay, makes sense. Revenue.
Not revenue. Cash from operations. It just recently even made money from its operations. When people tell me they're investing a lot, that's down here in capital expenditures. If you look, they were losing money as a company just making cars for 7 of the last 10 years. So when people say that, I'm like, another example of you not understanding the numbers. Read a financial statement. It couldn't even make money selling cars. Forget about all the factories it was building. Forget about all those things. It couldn't even make money selling cars, making cars and selling them. It just recently figured out how to do that. So right now, in the last year, their free cash flow was $2.4 billion less $1.4 billion in capital. That's $1 billion. Okay? So their price is $150 billion. Divided by $1 billion, it's 152 to 1. The current stock market is 18 to 1.
Slow down. Go back a bit. Go back a paragraph.
So their free cash flow is cash from operations, right here, less capital expenditures. So 2.4 billion less 1.4 billion.
So the capital expenditures, this is like building more factories and
plants, factories, expansion, all that stuff. Okay. $1 billion in free cash flow. Okay.
$1 billion in free cash. Got it.
Right now, the market's about 18 times free cash flow, which is still very expensive. 18 times, which is already expensive. Tesla's at 152 times free cash flow.
152 times.
Which means if you buy it today, and let's say it quadruples. Let's say it goes up 10 times. It has to go up 10 times. It has to go up 9 times to even be at the level of the market at today. You're telling me if it goes up 9 times that the stock won't go even higher based on people's stupid comments of, well, look, the thing they don't realize is they're paying today for what they expect to happen in the future. That doesn't work because when it happens, they want to price. Oh, look, it happened. Price goes up. But wait a second, you already paid more because of what was going to happen. It's like if you sat there and said, here's a wallet with $1 million in it. I'm going to go pay $1 million for it because once I get that $1 million, I have $1 million. You get the $1 million, you're like, oh, I have $1 million now. I'm going to go pay another $500,000 for it. But you already paid the $1 million for the wallet with $1 million in it. Why are you paying more again? You finally got the $1 million. You broke even. Does that make sense?
Well, again, I think to a normal person, they're just going to say that, wait a minute, their cash from operations has drastically increased from a negative 61 million to 2 billion. They are investing. Why won't this stock go to 1,500? I've heard numbers of 4,000 per share.
Great. 4,000 a share. It'll be selling then at that point for 750 times free cash flow this last year. Do I think free cash flow will increase at Tesla? Absolutely. But it has to be 10 times greater than it is today to even make sense in this expensive market. So it basically needs to be 20 times what it's at today in order to justify its current price. Its current price today, it basically has to have 20 times more free cash flow, which means essentially it has to sell 20 times more cars, which means it has to sell 7.3 million cars, which means it has to be almost the size of Toyota to justify its price today.
But what is the difference between, in your mind, justifying it with numbers and just justifying it with fandom and people wanting to invest in it? I mean, I guess I still don't see the difference why if someone says, hey, I'm a huge fan and this stock is still going to go through the roof, regardless of those numbers, it has shown it's still going to go through the roof and I'm going to invest in it because I want my money to go through the roof too.
That's trading. That's not investing.
Oh.
By the way, Lisa says I'm talking too loud. Am I talking too loud?
You're great. You're great. I actually like how with your headphones in, you're not projecting as much. She said, oh, there she is. Oh, there she is. A rare podcast.
He said he doesn't think so.
So no talk.
No, he said I'm speaking just fine. You know, who would have thought that the people closest to us are the ones holding us down, Seth?
Tell Lisa that you're very fired up about Tesla. I mean, she should know.
Seth says I'm very fired up by Tesla and I should be allowed to do this because I'm an investing god.
I mean, that's just it, Paul. That is the argument back to me. Like, this stock is going to go really higher because everyone loves it. I don't care about the damn numbers.
Maybe that's not investing, though. That's not investing. Stocks are a voting machine in the short run and a weighing machine in the long run. The votes are big. The fandom's high. The votes are coming in. The stock goes up. But eventually, people will say, but if stock, let me figure out what I can get. I can go make this. It happens every single time. Anybody out there who thinks Tesla is amazing, let's go make a bet right now on today's stock price of $826 a share. Let's make any bet you want. Let's go figure it out. Ironically, Seth, I've offered this many times on my LinkedIn for everybody having to do with the stock market, and nobody's ever taken me up on it. I've said, name any bet you want. Any bet you want. Let's figure it out. I have a bet with one person for dinner that stocks will be below 2650. The S&P will be below 2650 in 2028. And he thinks he's going to win that. Great. More power to him. I think I'm going to win it.
2028?
Yep. 8 years from now, I still think stocks will be below where they are today.
Really?
Yeah, I absolutely do.
Wow. Well, this is interesting, Paul, to see these numbers.
Welcome.
Other people have asked, how do I get to these numbers? What is this? You're paying for that sort of?
Yeah, I pay that. It's called Y charts, but you can get these anywhere. You can get these on Google Finance, Yahoo. I pay for this because it's all organized better and all that stuff. It costs about $300 a month to get that.
Yeah, that's nice. Well, all right, Paul. Thanks for your update on Tesla. You're still not buying. I don't think you ever will be, but.
No, that's not true. I always tell people I'll be a big fan of Amazon at some point in the future. I'll be telling people you need to own Amazon. You know what they'll say? But you didn't want to before. Yeah, because it was $2,000 a share, you idiots. Yeah. The fact that you don't see Every card, when you play poker, changes the entire approach of that hand.
Yeah.
Price is that in the stock market. It changes that it changes how you should approach that. It's no different. In poker, you get your 2 cards. The first 3 they flip over. That changes your value of your 2 cards immediately. They flip a 4th one over, changes the cards, the values. No different in stocks. The price is the biggest fluctuator. If prices fall in half, it immediately changes the price. It immediately changes how you should approach everything you see. A stock that might have been overpriced before might be underpriced. The exact same company. That's what I'm gonna do.
Yeah, I hear you. All right, Paul, good update. Subscribe below, guys, on YouTube. Follow us on YouTube, Learn From Us channel. Paul and I will be doing this podcast till the end of time. So we're doing great. Actually, I got some grays coming in, Paul. It's finally happening.
Oh.
Yeah.
Oh.
Not you, that jet black hair. Look at you.
Oh, no, I have grays.
Oh, look at you. All right.
Yeah, Lisa likes my grays, don't you, Lisa?
You are human.
She loves my grays.
Wow, okay. Salt and pepper. All right. Thanks for joining us, guys. Learn From Us. See you.
Peace.